Foreclosure numbers are on the rise. We're going to take a look at that today, and also some articles coming out about a big pool of supply, new construction, increasing supply, as well as resale homes, both nationally. And we're, of course, going to look at what's going on in Phoenix. So let's jump into it. Happy Wednesday. Thank you for joining me today. Let's talk about these foreclosures. So it wasn't long ago that we talked about foreclosures, and you can see on this bar chart here that we're still relatively low. So here's where we're at today. Here is the pandemic. Here is the fallout from the great financial crisis. This is 2011, 2012, 2013. So let's break this down. So this is increasing a little bit. According to the Cromford report, we had actually 422 notices of trustee sale in January. And if you're not familiar, a notice of trustee sale basically gives the homeowner a warning that they are behind on their payments. Their home will go into foreclosure if they don't come current. I think it's within a 90-day time period. I'd have to double check that. So this is kind of that initial notice for these homeowners, and they have the ability to not go into foreclosure. But we did see an increase in this. And if we look back to this time frame, this was the pandemic time frame, there was basically nobody going into foreclosure. Now we're starting to see an increase. Is this something we should be worried about? Because it wasn't too long ago where I shared that we saw an increase in foreclosures at that point in time. So we're starting to see it again. According to the Cromford report, we are pretty much on our way back to normal, because the long-term average for foreclosures or notice of trustee sales in our market is 1,846 on a monthly basis. That's the long-term average. And we're at 422. So we have a ways to go until we get to that long-term average, which is somewhat normal for us, although we are starting to see this climb compared to where we had been in the past. So you can see obviously the larger bars here in 2011, 12, 2013. Even before that, the number of notice of trustee sales was higher than that. If we go back to 2013, the monthly total was around 1,500 a month. Again, we're at 422. And in 2009, we saw as many as 10,000 in a month. And the long-term average, like I said, is 1,846. So are foreclosures something to be concerned about at this point in time? No. Is it something to watch? Yes. As always, we're going to keep an eye on this trend. Now, one thing that's interesting too is okay, we have that 422 notice of trustee sales. How many actually go into foreclosure? So according to the Cromford report, there were 79 completed trustee sales in January, of which 63 were residential properties. So if you're someone who's been hoping to buy a foreclosure property, you have real slim pickings out there. That's 63 options in a month total. That was it. And then they say, however, that this is the highest count since February of 2020 and more than 3 times the number in January of 2024. The long-term average of these actual foreclosures is 915. So from 63, we have a really long way to go. But, something to keep an eye on. So that is the deal with foreclosures. Now, I thought this was interesting. This article from Yahoo Finance, 2024 new home sales hit their highest pace in 3 years. Does that mean lower home prices are around the corner? They are talking about new construction. And when we look back to 2024, they're saying that we actually saw new home sales hit their highest level since 2021. So they're saying that now that we're seeing a lot more new home sales, we're also seeing more new home inventory. Does this mean that prices will start to shift? They're saying an industry expert predicts we'll see even more new construction in 2025 to offer price relief for those seeking to jump from renting to home ownership. This is a little bit confusing to me because we had just seen an article and had looked at the information specifically for Phoenix that new construction permits were slowing down a little bit in hesitation with new government policy. So I don't know that this is actually going to play out, maybe not in Phoenix at least. They're saying demand is still outpacing supply in many regions, but mortgage rates remain high. Right now, the United States is missing 4.5 million homes. That inventory shortage has driven up the cost of homes significantly. And that is like the overarching problem, right? If we're looking at things nationally, we're looking at the supply of homes and how many people need homes in this country. We do have a lack of homes, and so builders are incentivized to build. However, we all know when we look regionally, things might be different in various markets. And in the Phoenix area, we did see a bit of a pause on those new home permits. So we'll see what happens. So according to this article, 2025 may be a glimmer of hope for home buyers because of some additional new construction. And again, that's looking nationally, but we'll keep an eye on what's going on in the Phoenix area. One of the big incentives of new construction is that they can buy down the rates, and that makes it much affordable for buyers. And of course, resale homes, existing home sellers can do the same thing, but they're less willing because it really does cut into their net proceeds. And so this article is talking about how consumers might finally be accepting higher for longer mortgage rates, which I agree. I think they are accepting it. Does it mean that they're actually acting on it and jumping into the housing market? That's the other question, right? And that isn't really addressed in this article. It's saying that as rates have been stuck around 7%, the net share of consumers who believe they'll fall, that the rates will fall in the next 12 months declined sharply in Fannie Mae's latest survey. So this survey is basically saying that more people are now saying that mortgage rates will probably not come down, and fewer people are betting that rates will come down. But no one is talking about whether or not this makes an impact on their move to buy a home in this market. So what is going on with mortgage rates? Well, last week we saw mortgage rates microscopically lower, according to Mortgage News Daily. And that's because we had the jobs data come out on Friday. It did make some adjustments to the market, but really nothing too significant. We're actually sitting today at about 7.01% on a 30-year fixed. Of course, all of that is dependent on your credit score and a number of qualifications, but that's generally where we're at today, which just isn't too much movement from where we've been over the past few weeks. Now, I will say I will take less volatility if it means we're going to have just a little bit more predictability, but 7% is still not the ideal number for most people. So what happened with this jobs report? So the jobs report came out on Friday. 143,000 new jobs were added, falling short of expectations. They're saying that the anticipation was 175,000 jobs. However, upward revisions totaling 100,000 jobs for the prior 2 months affirm the U.S. labor market remains stable. Household survey showed a slight decrease in unemployment from 4.1% to 4%. Consumers continue to experience real wage growth, with average hourly earnings increasing by 4.1% year over year. Healthcare, government sectors added 93,000 jobs in January. Cyclical sectors like construction, manufacturing remained subdued, with only 7,000 jobs added in January and 73,000 over the past year. So why does all of this matter to us? Well, right now the Fed is really tracking the labor market as a key indication of what moves they're going to make next. We had been very, very focused on inflation, and inflation isn't as much of their concern as the labor market is at this point. We will get inflation data this week, by the way, so we need to keep an eye out for that. But basically, unless the labor market starts to show some signs of breaking rather than just weakening, the Fed is probably not going to cut the rate or rush to be cutting the rate. So more than likely, this isn't affecting their next decision. We're probably still holding off on rate cuts for a little while. But as I've said before, the federal funds rate is not the mortgage interest rate. And what the Fed does isn't always directly affecting mortgage rates. We just kind of have to keep an eye on what's going on in the markets in general to know how mortgage rates may react. So I said there is a big pool of supply. Let's talk about what's going on there. And first, if any of this is helpful for you, consider subscribing or share this video with someone who may be interested. New listings post biggest increase of the year while home buying demand declines, leading to a big pool of supply. This is according to Redfin, looking at the market nationally. They're saying there's been an uptick in new listings and slow sales. It's led to the typical home selling for 2% under asking price, the biggest discount in 2 years, but housing costs are still ultra high. Now, we've looked at the list price to sales price ratio recently for the Phoenix area, and that is around, I want to say, 97, 98%. So this information tracks with where we're at here in Phoenix as well. New listings of U.S. home sales rose 7.9% from a year earlier during the 4 weeks ending February 2nd. On the buying side, pending sales have improved marginally. They're still down 8.1% year over year. And new listings and lack of sales is contributing to a growing pool of supply for home buyers to choose from. We've talked a little bit about this. We are seeing inventory increasing in the Phoenix area, and we don't have the demand that is keeping up with it, largely due to mortgage rates and affordability. So where we're at with our months of supply, because they're calling out that the months of supply in across the country, there's about 5 months of supply on the market, up from 4.4 months of supply a year ago. If we look at Phoenix, we're at 4.7 months of supply, so just slightly lower than the rest of the country as a whole, but pretty much on track with what we're seeing everywhere else. And if you're curious about the months of supply in your city specifically, whether you're a buyer or a seller, check the description below to get that information. Now, if we look at our active listings, this is still climbing, but you can see a little bit of a taper off here. We're not getting as many active listings piling up on the market. Remember, this is just active listings. This is not new listings coming to the market. So when we see this starting to curve, it could be for a number of reasons. It could be that fewer listings are hitting the market week to week, or that more buyers are coming out and actually making offers and putting those listings under contract. So we're not seeing this skyrocketing anymore, but we are still seeing active inventory, active listings increasing, which is typical for this time of year. We just want to make sure it's not like shooting up without any demand being able to absorb it. Now, last week I talked about how we tend to see sales pick up around last week every single year, and I want to track that. Well, we can't see too much yet, but when we look at the sales per month, we are tracking similar to last year, which is kind of our typical pattern. And then usually after the Super Bowl, we do start to see a lot more activity in the Phoenix real estate market. So Super Bowl is over. This will be a very telling week to see if we start to see more activity, if we see our sales per month start to increase, because this will be indicative of the activity we had at the beginning of the year versus this is tracking really those sales that closed that were probably negotiated in December. That's always kind of a lower number anyway. So we'll keep an eye on the number of sales taking place on a weekly basis, and likely we'll start to see an increase. Now, the CMI has not been showing strength. We're at 86.8, so definitely under 90, meaning that we are in a buyer's market for the Phoenix metro area. Demand at 77.3, which has gone down slightly. Supply at 89.1, which has gone up slightly. So supply is only 11% below normal, and demand is about 23% below normal. So right now, being in a buyer's market across the Phoenix metro area, with supply increasing and rates not adjusting, we may remain in this number or in a buyer's market for a little bit of time. We'll have to see. There's going to have to be some strength in demand coming out and leveling off of supply in order for us to get back to a balanced market. If we look at every major city, we're seeing a lot of red arrows. Overall, the average change month to month for this week was negative 5.5%. Last week, the overall average change month to month was negative 0.2%. So again, seeing some acceleration towards a buyer's market for the most part with all of these cities. They do say the Southeast Valley is the strongest because we've got Queen Creek, Mesa, and Gilbert still positive. Goodyear is positive as well, at least for now. So that is kind of the stronger areas of the valley. And then, if you see Tempe here, Scottsdale, Gilbert, all of those are really still in a seller's market technically, but moving away from that as we're tracking week to week. The Cromford Report does say sellers must keep their fingers crossed that demand starts to show some life after the Super Bowl. In most years, we see buyers emerge once this event is over. So we're really at that turning point. Time will tell if the market is going to pick up to our typical spring buying season, or if we are going to be left with a lot of inventory and not a lot of buyers. Last week, I had some of you comment, if you are a real estate agent, to let me know if you've seen a lot of listings coming your way, a lot of sellers reaching out to you. A couple of you have said, yes, you're having that same experience. So we may start to see more listings on the market. I know that my team has a lot upcoming, probably another 5 to 10 listings over the next month or so. So if I'm experiencing that and everyone else is experiencing the same, we may be in a position where we're going to see a lot of inventory on the market, but time will tell. Too hard to predict at the moment. The contract ratio, we've got a few zip codes that are warming up. Tolleson has been on the list for a while. We've got this one in Peoria, 85381. Glendale 85310, and then Chandler 85226. And all of these are really because we have more listings under contract than are active. So for instance, in Chandler, there's only 54 active and 36 of them are under contract in this zip code. So although it's showing that it's hot, we still have just kind of a low number of listings in general, with a good number of them being under contract. So this is always a great indication, but you also have to remember sometimes the sample size in these zip codes can be fairly small. Thanks for joining me this week. I will see you all next week on my next market update.